Hello everyone, how are you today? Welcome once again to Online Money with Peter. Trust you're doing great. Alright, so on this platform, I show you how to make money online using several platforms, and Forex trading is one of the platforms I use to show you how to make money online. So today, I want to show you how to technically analyze the market. Alright, you see, technical analysis is very key for traders to use to evaluate the market in order to know when and where to place a trade. So there are several ways by which you can actually analyze the market before placing a trade. We have the technical analysis, and we also have the fundamental analysis. But today, I want to briefly talk about how to technically analyze the forex market before placing a trade, and that is what we call technical analysis. Now, if you want a comprehensive training on how to trade the forex market, please kindly become a member, and I'm going to give you member videos that will help you to trade the forex market profitably. All right, and also if you have not already subscribed to Online Money with Peter, please kindly subscribe so that subsequently, as I upload more of these videos, you'll be one of the first to get notified. If you have done so, let's continue. All right, now what is technical analysis? Now, technical analysis is a procedure or process whereby you evaluate or analyze the market to know what had happened in the forex market previously, and then you compare what had happened previously with what is happening currently in the market, and with this information that you gather from what had happened before and what is happening now, then you can actually predict where the price could be going next. Just like you're analyzing the market to know what had happened before, all right, to help you know what is happening now so that you can take your trades. All right, you see in forex markets, all right, all the candlesticks you see moving up and down, they keep repeating themselves. All the forex patterns and everything, they just keep repeating themselves. Now, if you know when a particular pattern is forming, you know that when this particular pattern forms, you know that it had formed before. And when this pattern was formed before, what happened? Now, if you know what happened previously, and the pattern now you can see happening currently in the chart, then you should be able to predict what is going to happen next, because it's not the first time that the pattern was created. All right, so technical analysis basically is just to evaluate the market, know what had happened before, compare what is happening now with what has happened before, and then you can predict where it's going. And then what are the tools that you can use to analyze the market? The tools that are used to analyze the forex market are called indicators. Now, these indicators, all right, there are several of them. There are so many thousands of them, and of course you cannot use all the indicators. You have to choose the one that suits your trading style. All right, depending on the trader that you are, depending on your plan, your trading plan, your strategy, and all that, then you choose the one that fits you, that flows along with your strategy. All right, so subsequently, I'm going to be showing you some of these strategies, some of these indicators, and how to apply these indicators to your chart, and also how to use these indicators to enable you plan your trade and take profitable trades. All right, so I'm going to talk about one or two of them now. Then subsequently, I'm going to show you how to use this indicator, use the other indicators. All right, so today I want to show you how to analyze the market using the horizontal line. Horizontal line is very, very key to analyzing the market, to know what had happened before. All right, so I'm using MT5. Then you go to, this is the horizontal line here. All right, so click on it and then you place it here, okay, on top of this wick, this candlestick wick. All right, then also take another one and place it here, all right, on this resistance area. All right, the reason why I place these two lines is because of, when we talk about resistance, we are not referring to a line, as you can see here. We're referring to the zone or the area, because sometimes the price would almost get to this line or to this area and then reverse, or sometimes the price will move above this line or even above this one and then reverse. So these all areas that I have drawn this horizontal line, they are called resistance area. And resistance area is area where buyers are resistance areas are areas where sellers are queuing to sell into the market. All right, while this is called support. Also, support is an area where buyers are queuing up to buy. So we call buyer's zone or buyer's area. All right, so this area here is called the buyer's zones or buyer's area, while this one above is a seller's zone or seller's area. This is like a ceiling in the house where price goes, hits the ceiling, and then comes back. And this is like the floor where price go, hit the floor, and then bounces back. And of course, sometimes the price could move below the line here, like you can see here, it can move below. But when it closes around this area. All right, so all these areas are the support zone, support area, and all this area here are the resistance area or seller's area. All right, so now I have drawn this my support zone and resistance zone. How can I analyze this market using this? So let's start here from the support. You see now the price was going up, and then it broke out of this zone. It broke out here and went to the sellers here. All right, so because of the strength of the sellers here or the availability of the sellers here, the price came back to this buyer zone. All right, but the strength of the sellers were actually not enough to push the price down at this area. Because of the volume of buyers here, the buyers pushed the price up. Now, so in this area, it started ranging. You know, it reversed here, it's reversed as resistance, came back to the support and reversed, went back up to the resistance and reversed, came back to the support and reversed, went back to the resistance and reversed, and so on and so forth. But when it came here, eventually it broke out of the support. Now, the market can either be in three phases. The market can either be trending up or trending down, or it could be sideways. So it cannot be sideways forever, or it cannot be a choppy market forever. All right, if it's trending up, it cannot trend up forever. If it's trending down, it cannot trend down forever. You have to get to a point where it's going to break out or reverse and go to the opposite direction. As it is here, it ranged for some time, and then it broke out of the range here. Then it was below this support. Now this support, when the price broke out of this support, the support now became resistance. So we can see that it went back to retest and reversed here and reversed here, and then tried to break out, could not break out, was a false breakout, came back in, you know, and went back into this range. Okay, all right, now having seen that the price had been going sideways, for example, let's assume this was a few days, or depending on the kind of trader that you are. All right, so let's assume this few days or few candlesticks. Okay, let's say I'll take this as 1 hour chart. Let's assume that every chart here is 1 hour. So 1, 2, 3, 4, 5, 6 candlesticks, the seller's candlesticks, 6 of them came down and reversed here. All right, and went back up. Now this has now become history. This information given to me here telling me that there are buyers here. All right, so the buyers pushed the price down, and then it came back to this buyer zone. Now the sellers here, you know, had some strength. The sellers pushed the price and broke out of this buyer zone. It broke out, but the strength was actually not enough. It came back and then closed still around this buyer zone, telling us that the buyers here are still strong. So what information is it giving me here? The information that is giving me here historically is this area is strong. When the price got here previously, it did what? It's reversed. Then it came back to this zone and then reversed. Then the third time it came, formed the pin bar and then reversed. So with this information I've gotten, I've been able to analyze that this area is a support area. Probably in the future, when the price comes back to this zone, it's going to reverse. All right, bearing in mind that this is a sideways market. Now, if I'm a kind of trader that trades sideways market, what I would do is I will wait at this price to place a buy trade. All right, after the close of this one, the next candlestick that is formed, few cents above, I will make my trade decision. I'm going to take a trade. So you can see that analyzing this area technically, you know, gives me information that the price previously reversed here, the price reversed here, the price reversed here, making this a strong area or strong support. So when I first started, I told you about technical analysis, that technical analysis means, you know, evaluating the price market historically, previously, what had happened before, then compare it with what is happening now. Now, if what had happened before is the same with what is happening now, then what information is it giving to us? It's giving us such information that what had happened before probably is going to happen here again. That is, it's going to reverse at this point. All right, can you see that? Can you see how technical analysis works? Now, this is on a sideways market. It works on all markets, whether it's on an uptrend or on a downtrend. It's the same thing. Just look for historical information that was given to you with respect to the candlestick patterns or candlestick formation. Compare it with the current price, the current behavior of the candlestick. Then you can place your trade. And of course, you need to have a trading plan. You need to have a strategy. Don't ever trade against your trading plan. Don't ever trade against your strategy. Flow along with your trading strategy. All right, now if we go down again, now we can see here that it's what's trending up at this point. Okay, now I want to get information now. With this information, what do I think is going to happen in the future? So again, I may have to delete this whole line, but I wouldn't delete it for sake of time. I'll take another trend line, another horizontal line, and placed here. Having seen that it reversed here, broke out, came again around this area, it reversed again. All right, I place another one here. So this is my support zone. Then I'll place my resistance. Okay, another one. Okay, all right. So this is my resistance area, and this is my support area. Now it broke out of this choppy area. All right, it broke out and start to trend up. Now when we pick my trend line and just take a look at it, so we can see. Okay, then let me change the color to white. Okay, change it to this one. And okay, now this is a trend line. Okay, you can use your horizontal line or trend line to analyze the market. All right, now don't be confused with this horizontal and trend line that I put here. All right, I know why I put this trend line here is to give me more confirmation or more information on what is happening, what had happened before, and then compare with what is happening now. Now, on this trend line, what can we see? When the price, we have impulse, you can see these higher highs, and we have the higher lows. Okay, you can see higher highs and higher lows. So the price went to this resistance, formed the high, came back to this support. This is the higher lows, formed another high here, came back to this support, another high, and then it came back. Now that's for the trend line. Now for this horizontal line, you see that it broke out of this support, came back to the support area, and confirming by the trend line, went up again, came back. You can see that went up again, all right, and came back. So with this, you can see that I think here the trend line is more. So I have to delete my horizontal line because the trend line now I can see is more reliable than the horizontal line. All right. Okay. So now this is a trend line. Now, so we can see that it reversed from the support, formed a high, came back to this. This is a support as well. All right. So I'll place my. All right. So this is the support. So it formed a. It reversed at the support, went back up, came back and reversed at the support. Now, what is the information I got here? The information I got here is that it previously reversed from this trend line, and it came back, reversed from this trend line, formed another high, came back and reversed from this trend line. So what should I do? It means that in the future, when the price gets back to this trend line, it's going to reverse. So you can see the previous historical information. All right, remember technical analysis using historical information, compare it with what is happening currently. Now it can give you idea of what is going to happen next or where the price is going next. So since it's reversed from this trend line to this one to this one, so the next time it's going to reverse probably more than say 70-80% sure. Now you can make your trade decision here. You can buy here, a stop loss somewhere here, take profits depending on your risk to reward ratio. So you can see that with your trend line and horizontal line, you can analyze the forex market, and then it can help you with your trading decision. I want to believe that you find this very, very informative. Now, if you have any question or comment, please kindly drop it in the comment section. I highly appreciate you for doing that. All right. Now, if you want to get more members only videos on how to help you to trade profitably or to be a consistent profitable forex trader, kindly become a member, and I'm going to give you, of course, member videos that will help you to trade the forex market and be making consistent profit. All right, so at this juncture, I want to call it a day here, and I also want to say thank you very much for watching till this time. All right, now if you have not already subscribed, please do subscribe so that subsequently, as I upload more of these videos, you will be one of the first individuals to get notified. Thank you very much, and I'm going to see you next time with another interesting and informative forex trading video. I'm going to see you next time. Bye bye.